After hearing so much about China and Europe, it seems if Europe couldn't trade with China, things could be worse. And a lot of countries are already struggling. But what about China? Does China care about Europe? I really want to know because right now, Europe's economy isn't doing so well. Part of the reason is that they've been cut off from Russian oil, and then they have to go along with the sanctions. Not that they're being sanctioned, but they have to follow America's lead and sanction China on a bunch of different issues, right? So that's made Europe decline. Let's talk about the state of Europe's economy first. For example, Germany, which is the biggest economy in Europe. Most recently, Germany's factory orders have dropped, down by 0.4%, even though it was expected to increase by 0.4%. Germany is a country that focuses heavily on manufacturing, right? And right now, factory orders in the manufacturing sector are below 100%, sitting at around 84% for 24 consecutive months, 2 years since the Russia-Ukraine war started. That forced them to cut off from cheap Russian oil, which in turn raised Germany's production costs. That's the reason why. When the big player in Europe is struggling, everyone else struggles too, right? The main industry in Germany that's been hit is the automotive sector, because that's Germany's #1 industry. BMW, Mercedes-Benz. But the one that's been hit the hardest, showing the most severe symptoms, is Volkswagen. That's because Volkswagen is the top car brand in Germany. Volkswagen just reported a 20% drop in revenue in the latest quarter. Even the Volkswagen brand itself, they can't even launch new models right now because they're facing problems with production costs. No matter what they do, production costs just won't go down since oil prices and everything else are expensive. So they can't release new models, which has completely stalled their business. They can't produce new vehicles to compete in the global EV price war. And the ones who are struggling the most to keep up aren't anyone else but, yeah, it's China. If we don't just look at Europe, but also at the United States, right now the US is preparing to raise tariffs and impose trade barriers. There's a real possibility that tariffs on Chinese EVs could go up to 100%. But as for Europe, Europe probably can't handle that because whether it's BMW, Volkswagen, or Mercedes-Benz, the real manufacturers in Germany have come out and loudly said they're basically saying, Europe, please don't raise tariffs on Chinese EVs. Surprising, right? Even though they can't really compete, the factory owners themselves are saying not to raise tariffs on Chinese EVs because some EV parts still need to be imported from China. And if Europe raises tariffs to block Chinese EVs, China will just retaliate with their own tariffs, and things will get messy. Why? Because right now, Europe is the second biggest market for selling EVs, but the top spot goes to China. For example, BMW sold 32% of its cars in China last quarter, which is a huge number. So looking at Europe, it's clear that Europe actually needs China. Now let's turn our attention to China. What about China then? Does China care about Europe? Does it need Europe? The answer is yes. China also needs Europe because the European market is just as important for China. The European Union accounts for 40% of China's EV exports in 2024, which is this year. What's more, China makes a lot more profit selling EVs in Europe than it does selling them domestically. For example, BYD's Seal model earns much higher profits when sold in Europe. That's $15,300 per car, while if they sell in China, they only make about $1,400 profit per car. So if China manufactures cars and sells them in Europe, they make 10 times the profit. This is why President Xi Jinping personally went on a tour of Europe. It's the first time in 5 years that President Xi has traveled to Europe. He visited major economies like France, as well as Serbia and Hungary, to strengthen relationships. It is quite clear that with this trip to Serbia, President Xi Jinping not only went there specifically to commemorate what NATO once did to China. 25 years ago, the United States claimed it accidentally fired a missile that hit the Chinese embassy in Serbia, which tragically resulted in the deaths of 3 Chinese journalists. So President Xi made the decision to visit partly to remember exactly what America did to the Chinese embassy at that location. Serbia is one of the European countries that has maintained a pretty good relationship with China. Ever since the Russia-Ukraine war began, Serbia has been one of the countries that did not join in on the sanctions led by the United States. This time, President Xi Jinping went to strengthen ties by signing a free trade agreement with Serbia. This free trade agreement will allow up to 95% of Serbian goods to enter China without any tariffs for the next 5 to 10 years. This is one of the key factors that will guarantee Serbia's trade stability. Another country that President Xi Jinping visited was Hungary. Hungary also rolled out the red carpet and warmly welcomed Xi Jinping. As a result, President Xi Jinping elevated the relationship with Hungary, making it even closer. This strengthening of ties will, of course, allow Hungary to earn more money from trade with China. And they also receive technology from China to support domestic production. This could allow Hungary, which at the time was not one of Europe's major economies, to rise up and compete in the EV market on par with Germany. So, as mentioned earlier, these two countries are strengthening their trade ties with China, and China is also building very close relations with them. This is considered to be a guarantee of trade stability for these two countries. That's because China has the potential to grow into an economic superpower. According to IMF projections, as reported by Bloomberg, within the next 5 years, China could account for as much as 21% of global GDP. This figure is even higher than the combined total of all the G7 countries. So if you ask about the Chinese economy, can China's economy really grow that much? Because recently, we've just seen a huge collapse in the real estate sector and the shadow banking system. Everything seemed to fall apart in a big way. But did you notice? Lately, Chinese stocks have started to bounce back. So the question is this rebound just a temporary blip, or can it really keep going? No one can really answer whether this time, with China's economy starting to pick up, it will actually continue to grow, or if it will drop again. But what's clear is that this recent rebound has come from the technology sector. When it comes to Chinese stocks, they're divided into two categories: Hang Seng stocks, which are listed in Hong Kong, and A shares, which are stocks in mainland China. Honestly, the A shares from the mainland haven't really gone up. They're still swinging up and down. That's mainly because the real estate problem is still a major issue in China. It's keeping demand in China, even if it's rising, from really taking off. So you could say that the mainland Chinese economy still isn't all that exciting. It's not that flashy or spectacular, but you have to admit that China's high-tech sector, which is in the Hang Seng market in Hong Kong, is a key driver, a new growth engine that's helping China lift its head up again. So if you're holding Chinese stocks, you really need to check carefully whether your stocks are in the Hang Seng or in the A shares. Because if they're in the Hang Seng, they've already gone up, but the A shares are still kind of sliding sideways. Another thing that's helping China's economy to pick up, because China is really stepping up its efforts to do business with the world. They're not shutting anyone out or holding grudges. You never see China getting mad at someone and refusing to sell to them or anything like that. If you look at this chart, you can see just how much China is ramping up its exports to the world. Their exports have jumped by 1.5%. That means the world is buying more goods from China. But the really wow number is China's imports, which have gone up by 8.4%. That means China is also building friendly relations by buying more from other countries too, since their imports have increased by 8.4%. Do you know where this rise in China's imports is coming from? They come from South Korea and Taiwan. In the United States, see, China doesn't really hold grudges and refuse to buy from someone they're upset with. As for China's booming exports, they're mainly chips, high-tech products, solar panels, and all sorts of other things. The government gives strong support, and their production costs are low, so they can manufacture products. Whether they're actually good or not, I'm not sure, but they're definitely cheap and can be sold all over the world. This is turning into a new kind of battle. Last year, the EV battle was really intense, with competition in price, quality, design, and everything else. It was clear that no one could really compete with China. The EV battle. Before the dust even settles, there's already a new battle coming. This time, it's high-tech products. So is the United States afraid? Are they worried about high-tech products from China? Are they scared enough to sanction them? Because the United States has just announced an escalation of sanctions against China, and they've also told Europe to do the same. But it's unclear whether Europe will actually follow through. The US told Europe not to sell chips to China, but it seems like the real chip companies in Europe aren't too keen on going along with these sanctions. For example, Intel and Qualcomm have been ordered not to sell chips to Huawei. Intel came out and said, hey, but if I can't sell chips to China next quarter, my revenue is going to take a serious hit. So who's going to take responsibility for that? Okay, looking at this information, it's like, yeah, if the US really could sanction China on every order and truly isolate them, even China would feel the pain. If everyone just decided to cut China off like that, China would definitely be hurt. But looking at all the information so far, you can see that China is important to the EU, and the EU is important to China too. So who knows how much the EU would actually follow the US in sanctioning China, considering all the rules, friendships, and whatever back-channel talks they might have going on. Or maybe they would go ahead and sanction China, but would Europe just be doing it for show? Or would they really go all in and actually feel the pain from it? Because China is actually one of Europe's top spenders. Seriously, just look at this graph. EU exports to China totaled 224 billion euros in 2023. That's the revenue Europe earned from China, 224 billion euros last year. And of course, China isn't just sitting back. They went out and made sure the world knew about it. President Xi Jinping himself went on tour and declared that China's trade is so massive that no one can just cut it off whenever they feel like it. So by building trade relations with Europe and expanding China's trade network globally, it's like creating a protective shield. It's like China's own fortress, protecting them from being hit by American sanctions, so they won't get squeezed again like back in 2017 and 2018 when Donald Trump declared a trade war with China. That cut off China's cash flow, leaving them bleeding financially, and it led to economic problems that have continued all the way to the recent real estate crisis. And if China keeps trading and becomes a supplier of cheap goods, the greedier we get, the harder it will be for America to sanction China, right? Everyone loves cheap stuff. If one day we're selling products imported from China at low prices and making a big profit, could we really just cut China off all of a sudden? What if we stopped buying cheap Chinese raw materials? Costs would rise and profits would fall. Janet Yellen has already hit China with sanctions, recently targeting banks involved in financial transactions that help, like trading with Russia, which lets Russia get money to fund the war. So the question is, can China really pull this off, building this fortress island? This video is just talking about how they're building this fortress by using trade strategies to become the world's supplier of cheap goods. They're so big now that no one can just cut China off or sanction them like the US wants. And the thing is, they actually can do it, because over the past year, the countries have seriously de-dollarized, whether it's China or Russia. For example, Russia's foreign minister said that last year, 90% of Russia's trade didn't use the US dollar at all. And it's the same in the oil market. JP Morgan even reported that last year, in the global oil trading market, 20%, that's 1/5 of the world, didn't use the US dollar. This clearly shows that a multipolar world has already emerged. The United States is no longer the sole leader of the world, and America's influence is now being questioned. So we'll have to wait and see what happens next. In the next video, earlier I mentioned that this clip focuses specifically on China's trade strategies, which make it impossible for anyone to just cut China off easily. As for the next video, I'll leave you with a little teaser. The term maritime superpower refers to China's military power at sea. Please wish me luck that I have enough time to write about it. Fingers crossed. And don't forget to follow Money Monter as well. Thank you.